Welcome back, everybody, to the Bitcoin Business Bureau. I'm your host, of course, LitecoinLeader, sitting with a special guest. You'll see a lot now as we're in our office here in Albany, Oregon. Patrick, Divvy Daddy, welcome to the show.
Thanks, guys. I hope I'm not on too many shows. I don't want to work that much.
No, I'll be doing a lot of videos, but we'll be doing some with him.
I'll make some guest appearances.
Yeah. But in any event, we'll be able to do that a lot easier now, especially in person. But today, what I wanted to talk about was Patrick and I were talking offline about end of the year and how things are doing to wrap up the end of the year for the financial world and the crypto world. And then the idea of tax selling came up, and I wanted Patrick here to explain it because he was leading the conversation. So, Patrick, tell the viewers a little bit about what you can expect for the next couple of weeks due to tax selling.
Yeah, so one of the things I was, walking through with my clients, especially, and one of the things we're going to talk about, if you're part of our group, you'll hear the article. I'm going to be presenting it this next week. That should be published here shortly for the end of the year. But the reality is, and we'll talk more about it tomorrow in the AMA, how to do this better and what the steps are for going through this. We need to remember that with crypto, there is no wash rule. So what that means in the traditional sense with stocks, you're usually, if you sell a stock, you can't purchase it again for 30 days and claim the tax loss as well. So what you want to do with crypto, because you have the opportunity, is
not financial advice.
Well, if you have the opportunity, right, some people are choosing to say, let's say they took Bitcoin at 40,000. They're going to sell today at 16,000. It's okay because they can rebuy it 1 second later. That taxable loss still occurs. So now you get to write off another $24,000, $25,000 on your taxes. It's not an issue, and you still have the same cryptocurrency that you had 1 second ago. So what that is, it's called tax loss harvesting. And so that's what a lot of people are doing right now. You're looking at Cardano is down, Matic is down, Theta is down, Divi is down, Bitcoin is down. You just name it, it's down. You can't do that in stocks, but currently, right now, you can do that with crypto. So the wash rule is exempt for crypto. This is a strategy that a lot of CPAs are helping and talking to their clients too, so that they can maximize their tax losses as well, so that they eventually, the goal is right to pay less taxes. That's it. So if you're in that system and you have systems set up and structure set up to write off your taxes, you're going to want to make sure that you take advantage of some of those tax loss harvesting tricks so that you can reduce your taxable income that you owe.
And that's great advice. And I know that we talked about that last year, especially on my show and a few other shows. And there was talk about that it was going to end this year. Well, they proposed that legislation, never got enacted. So it still exists now for the wash rule. But if you're selling and buying back a second later, is that going to really impact the stock price or the crypto price?
It could. You might see a little bit of depreciation in the value of the asset you're holding because as you're selling, depends on liquidity, right? So smaller coins like Divi, you'll see dips and you might eat a lot more tax loss harvesting than you expected. And you may not be able to pick it back up as easy. So those are some of the risks that you have with some of the lower liquidity tokens. But things like Bitcoin, it's pretty simple to swap out at 16.5 and buy right back in at 16.5.
Yeah, for the lower liquidity ones, and you have to watch it in the first in, first out kind of rules too. So let's say you had 1 million Divi, and if you'd have to sell all 1 million Divi to really wash that out, then buy it back. Because if you sold 100,000 and bought that back, technically you're buying back to the last 100,000. And you're not the churn wouldn't work out.
Yeah, so if you bought 1 million Divi and you're only selling 100,000, then you're actually selling the first 100,000 that you purchased. Right. So that's how you have to account. It depends on, I guess it could depend on the way your structures are set up. That may not be like within crypto IRAs, they're a little different and the structures are reported differently. But specifically for your personal taxes, if you're going to be paying taxes in a company or a business or even your personal taxes, W-2 income, and you have some trading you've done, it doesn't make a whole lot of sense to just sit there and hold it and not take the tax loss.
So I'm just thinking,
not financial advice. Just my practical opinion.
I'm just thinking this through because there is a first in, first out rule. So if I sold 100,000 and then bought it right back 10 times, technically I would have sold all my first million first.
That's correct.
And then I would have replenished it. So you are churning. You're not trading with yourself, but you're trading with the market.
Yeah, it's that 1,100,000 that would be selling where you just bought the first one.
Correct. So
that's the first one.
So whatever you bought, if you want to harvest the taxes, let's just say you bought a million. Just a hypothetical example. You bought 1 million Divi. I don't know, 2 years ago when it was, $3 3-4 cents.
Sure.
And now you want to sell it where it's at 1, you would make 2 cents difference, but you have, because it's so illiquid, it's hard to move 100,000 divvy these days because not many people are selling, there's not many buyers. So you'd have to do a lot of churning, but you have to churn through the entire amount to realize that tax implications that you'd have to.
Yeah, it really works well for things like Bitcoin, Matic, Ethereum, Cardano, all those layer ones, anything with a lot of liquidity.
Right, top 50, top 100 coin with a lot of liquidity and a lot of exchanges. It's a lot easier to do, and you could even do it with like a simple swap or something like that. And I have a link to simple swap on my LitecoinLeader.com. But you could do it there. You could do it on Coinbase, wherever you want to do it. But
my recommendation is always learn to use the exchanges. You're going to get better value on the exchanges. So, it's about time for you to learn how to use it and do it yourself, because the only thing you're doing with using Simple Swap is you're using a decentralized exchange to do it automatically for you, and they don't care how much slippage you get. They're just going with the market. So the best way to do it is to really learn how to do it on exchange yourself, slowly sell those low liquidity coins. And the high liquidity coins, it doesn't really matter. Just do it yourself anyways. You don't need to pay the fees, but sometimes Simple Swap works really well and you're not having any slippage, and sometimes it's not the case.
Yeah, you just have to do the calculation for yourself and see what's the right value as far as time, effort, knowledge, risk of putting it on the exchange and then having to get it back off and those transaction fees and such. So it's a matter of work that you're willing to do yourself, but you are your own bank. But what I was going to recommend, I lost my train of thought there for a second. I was going to say something. If you're using those, if you're using Simple Swap or if you use Exodus, you can do it within those wallets for sure, but you are going to get the best value if you go and use an exchange. And with more liquidity on a lot of the different things, it's a lot easier to do with the bigger coins.
So if you got questions, reach out.
Yeah, and this is what I'm going to say. Now I remember it. That's part of doing when you film live. Sometimes they'll come in and out of your head, but that's why I need to start taking notes. But if you guys want to know about trading on exchanges or want to see like what a live book looks like when trading on like Qcoin or something like that, that's something that we're considering doing for our members in January, and just having like part of our AMAs is showing that, here's what sells and buy orders, what that looks like. If you want to learn that stuff and you're interested, please leave a comment below or let us know. But the comment is probably the best way. And consider joining us for a membership next month. And we'll if you want to see that video, we'll make that happen. But with all that said today, I'm going to close the drawer on the bureau. Wish you happy tax sailing and tax harvesting, and say follow leader, and we'll talk to you soon.